Before you make your next investment, ask yourself one question. Are you making this decision based on facts or feelings? It sounds simple, but that single question has separated successful investors from everyone else for generations. The biggest threat to your portfolio isn't inflation, market crashes, or even bad luck. It's your own emotions. Think about what happens when the market suddenly drops. Headlines scream that billions have been wiped out. Social media is filled with panic. Friends start talking about selling everything before it's too late. Without realizing it, fear takes over. Instead of following a plan, many investors hit the sell button, locking in losses that could have been temporary. Then, months later, when prices recover, they're left wondering where they went wrong. The opposite happens during a booming market. Prices keep climbing, and suddenly everyone seems to be making money. That's when greed quietly steps in. You begin to worry about missing out. You buy investments not because you've researched them, but because everyone else is buying. It's a classic case of emotional investing, and history has shown that buying out of excitement often leads to disappointment. This is where investment psychology becomes so important. Our brains are wired to avoid pain and chase rewards. That's useful for survival, but it's not always helpful when building wealth. Loss aversion makes a small decline feel unbearable. Confirmation bias pushes us to seek opinions that agree with what we already believe. Herd mentality convinces us that if everyone is doing something, it must be right. And overconfidence makes us think we can predict the next big move, even when the evidence says otherwise. The best investors aren't emotionless. They simply refuse to let emotions make their decisions. They create an investment plan before they invest. They diversify their portfolios. They focus on long-term investing instead of reacting to daily market noise. Most importantly, they stick to their strategy when emotions are at their strongest. If you want to become a better investor, don't spend all your time searching for the next hot stock. Spend more time understanding yourself. Your mindset will often determine your financial future more than your market predictions ever will. Remember, successful investing isn't about having the highest IQ. It's about having the discipline to stay calm when everyone else is losing theirs. If this gave you a new perspective on investment decisions and wealth building, subscribe for more insights on personal finance, investor mindset, and smarter investing. Your future self will thank you.